All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Monday, July 13th. So, what do we have in our hands today? Well, it looks like a pretty decent reversal day. This, of course, is when, we start the day in one direction and we reverse and we end up going the other way in a pretty decent fashion. I think that's pretty much what we have on our hands for the day. The Qs were up, about 1% for the day. They finished down 2%, overall from the day's range. That's down 3% intraday. Small caps were all over the place today. So let me look at small caps first, because I thought this was kind of interesting that they kind of held in there for a little bit. This was around, so we're on the 5-minute bar in IWM, basically till about 1:30. But these did at some point. Here it is. Here's what I'm referring to. On the open, they went and they dipped red, and then they came back and they rallied pretty hard up until that 130 point. But I thought that was a really interesting move for the small caps today, looking like they were gonna kind of go back and fade, and then this market kind of sucked some people in here a little bit with that strength going on from 10 o'clock to 1 o'clock, and then the big move. Qs were a little bit different. If we look at that chart, completely different looking, right? Rallied, looked very strong basically throughout the session, and then kind of started to come in a little bit around 12 o'clock, 1 o'clock, and then kept on going lower. So some interesting things that we noticed during the day, one of which, and we kind of spotted this in the room and said, hey, that's really kind of funny looking, was that as the market was going up, let's try it. Let's see if I can pair this to. So first of all, what I'm referring to is this one down here in the middle. This is the VXN. I've talked about this a few times, I'd say in the last 2 weeks, that first the VIX measures short-term volatility for the S&P. The S&P 500. That's all it does. It doesn't do anything for the small caps, and it doesn't do anything for the Qs, for the NASDAQ. The VXN measures the volatility, which is this one, for the VIX itself. And notice all morning long it was rising. That's not very typical of what normally happens. When the market usually rallies, it means that there's less volatility and the VIX or the VXN declines. Well, it wasn't doing that this morning. And it did this till about like 11:30, and I said, well, we'll see where this thing kind of turns out, because sometimes we do get false signals. Also, you have to keep in mind that all the VIX or the VXN is doing is measuring that volatility. That volatility actually can come. It's rare, but it can also happen when things are moving fast to the upside, which I think is what we saw a little bit in the beginning of the day too, right? Everybody associates, because typically when the market sells off, it happens faster than when the market goes up, right? That's why the old term, stairs up and elevator down, or escalator down. But every once in a while, the market goes up very fast too, and sometimes that is a warning signal, and that actually turned out to be a pretty decent warning signal. Was that the VXN was up about 6% as the market was going up. So that did turn out to be a definitive clue on what we were going to on what was developing for the day. So it's important. That's why I look at all three of these, because sometimes you do get that deviation, because as you could see, the VIX wasn't really doing that. It was going up a little bit, but it was still down on the day, while the VXN was actually up. So let's talk a little bit about, I got a decent amount of questions about why this happens. Let me just put this over to trades. About why this happens. And first of all, you have to take a step back and realize this market, and I think sometimes people get complacent when a market just goes up basically straight and every day. People are looking for some type of news when the market doesn't do that. Keep in mind that the market just doesn't go up, right? It goes up and it goes down. There's profit taking. After big runs in the market, there's often profit taking. Now, there's either profit taking ahead of a big event, Well, we kind of do have a big event coming. We've got earnings. My thought is, which we went over in the weekend video, in the macro video, is that swing trading is always very difficult during earnings season. It just is much harder. And especially, we've had all these names run into earnings. These analysts have been tripping over one another to raise price targets. That usually doesn't end well when they're doing that. Because I have to say, like, I have nothing against sell side analysts, but they're not typically right often. So when they keep putting out these profit targets, we've done a great job at profiting from them as day by day that's occurred. But these guys don't have any major read on what these. Sorry to say, they don't have a crystal ball either. So that's basically how that works. You could profit on that on the way up, but who knows if they're going to be right? They're raising all these price targets for Amazon, Apple, Netflix, you name it, every momentum name. And I just don't believe that they have a crystal ball and they're going to know any better than anybody else. So you kind of use that to your advantage. So as this move has taken place, this move higher, we've talked about this all along that sentiment has been running hot the last few weeks. But if you stayed out of the market, you've been penalized, right? Because the market has done this. So you're bound to kind of get caught in a reversal day. It just happens. What I normally do on days like this, it's unfortunately my trading P&L did not close where it was around like 11 o'clock today. So, I sold. I always give you, tell you exactly what I did, but I traded a little bit of AMD. I got out of my Domino's trade that I put on Friday. I got on a little bit of I was looking for a run into earnings, so I was taking as many profits as possible. I put on a Lennar trade because I thought the home builders looked pretty primed for a breakout. I played Home Depot. We'll talk about Home Depot in a second, but pretty telling level where that ran out. I put on a Chipotle trade because these were all trades that I was looking at in terms of my weekend setups. So I did add on a few of these. I took profits in Home Depot, and then what I did was I rolled the position out. I'll go over that chart in a second, but I just want to go through how the day kind of developed for me. But so making sure that I'm taking profits along the way. I took a starter position in Target because we saw a whole bunch of call activity. I got out of Visa. I took a target in Chipotle. I got out of Lennar because it wasn't working. It wasn't doing what I wanted it to do off the bat. Decided to cut it. Did that at 12:30. And then once I started to see things materialize and some things go down pretty quickly, I basically said, let me get out of the way, right? So I got out of Chipotle, which was still ended up being, I think, a profitable trade. But sometimes what I've learned to do when the market resets like this, and that's kind of what I think is going on right now, even though one day is not a trend, but there's so many things that have gotten way ahead of themselves. And that's been great for us trading day to day. Many traders have made some money on this, but the whole thing with trading is to make sure that you're locking in profits, right? So this is what I put, like on a reversal day, this is where you learn. You do learn some things as the market is going up, right? You learn to kind of let your runners, try to let your winners run. Sorry, I said that backwards. But all in all, you learn a lot more when the market starts to reverse and goes lower. And that takes some time. What I've learned to do is basically just get out of the way. When we're seeing things reverse after a big run up, just get out of the way. That the day that it happens, and I've talked about this now for a couple of weeks because I knew it was coming, right? You knew that at some point this market was going to give up some of the gains. And again, this is just one day. I don't know what tomorrow is going to do. But, you knew that this market just couldn't go up in a straight line forever, right? I hope you know that because I think some people, is a shock to them. But, for instance, all the software names, like these things can't go up forever in a straight line. That's just not how it works. So, what you do is you realize one day that these things are going to, correct a little bit after a huge run. And this group, the software group, has been in need of some consolidation, right? It's not just going to go up without any type of pullback or correction. So, and then normally what happens is once we have a little bit of consolidation, again, I don't know if we're going to get more of that tomorrow, but the way that the VIX closed on the highs up 32, up to 32, I would think at this point we're going to consolidate in front of earnings, maybe pull back a little bit more. So, what your job to do as a trader and as an investor is to not give back all of these gains that you've been making, right? And in your portfolio, I hope that you've had some gains. Now the whole thing is to not give it back once we start to see a little bit of red, right? That's the whole thing. That's where you separate yourself from being, an average trader to a pretty darn good trader. Is to kind of, not do the same thing that you were doing once we had this buy signal if we get a pure sell signal, which we don't really have yet. We have a reversal bar. But these are the things that you want to be going through in your mind is what adjustments are you going to make? I was talking to a trader about this after, after the close on Friday. And I was just saying this market's just been amazing without any major pullback and so forth. So, and at some point we're like, hey, we're going to get it. And this other person, this other trader that I was speaking to after the close on Friday, we were talking about how much our P&L is up for the year. And I said, it's on us to not, to make sure that we don't, you're going to give a little bit back if the market sells off hard. But the whole thing is not to give back the bulk of what you've gained. And again, that's where you make yourself become a really good trader is if you can stay out of that. So for today, I'm pretty, even though I was up a lot more this morning, and my P&L's red for the day, even though I took all those profits in the beginning of the day. But I'm okay with that. I am fully aware that I'm going to get caught after a three to 4 week run. I'm going to have one day where my P&L is going to reverse and go from positive to negative. It's just part of the game. Because if I was so conservative weeks ago, then I would have missed the last 3 weeks, right? And my P&L is very close to, year-to-date highs. So it's really it's not a big deal, and that's in my opinion, of course, and everything that I'm talking about is for information purposes only. I'm not giving any advice or recommendations, but you as well, I would think you have to be a little bit okay with that you're going to have one of those days where the market is going to do something that you weren't prepared for, and really it's on you about how you're going to manage it, right? Are you going to get it in your head that you need that money back that was where you were earlier in the day, or are you going to put things in the context of the last few months have been pretty awesome, and you're not going to get super greedy, and you're going to manage your risk appropriately? Those are the two things that are going to separate you from doing well in the next coming, days to weeks to months, versus if you're going to fight this tape and do what you do anyway, and do what you want to do anyway. So I say this because, again, I don't have a crystal ball. I don't know what's going to happen tomorrow. But for me, I didn't really do much at the end of the day because we have a little bit of a change in the market. So let it do its thing. You know that nobody can control the market, right? Nobody has that crystal ball and can control whether this market's going to go up or whether it's going to go down. You control your risk and how you're making adjustments. So that's it. And you could see a couple things that I did today, just to give you examples and I try to use my experience here. But yeah, I just get out of the way. So out of Chipotle, out of some AMD I'm holding, out of some cyber, out of my final piece of DXM. And then I put on a little bit of a put trade in Tesla because I think Tesla's gone up. While I'm a big fan of Tesla long term, I think it's gone up too much, and I think it come in. I think it can come in a little bit more. I know how great all the things that they're talking about, the batteries and so on and so forth, but it's gone up tremendously. What was it up 26, 27% last week? And it was up 14% this morning. That's not normal. I don't care if they're like, unless they're curing cancer, the stock shouldn't go up that. Like, you have to be a little bit realistic on any stock. Again, unless they're coming out, unless they have a study that says that they're curing cancer, then they should continue to go up that much. But some of the stuff, and Tesla's just one example. And again, I'm long Tesla in my other account because I've been riding the trend with that one. And same thing with my account that basically is more of trend following. If I need to make some adjustments this week, I will do that. But I don't think like, even though this is a nasty looking reversal bar, all we've done is we've lost the 5-day moving average. We don't really have a major sell signal because one day, like if you follow candlestick patterns, the basics of candlestick patterns, a 3-day 3 days is a pattern. One day is not a pattern. So, but you know, Amazon moving up straight up from 2783 to 3200. I could see this come in a bit more. So, we'll see how this materializes, but again, you just have to put this in perspective how great these moves have been over the last 2 weeks. It's been spectacular. I mean, listen, I've been trading since what, 99? 1999 is when I started my career out of college, and I don't know. I don't want to compare this to then because that was much different. But I don't know if I've seen something like this before. Basically, since then, stocks that have moved are moving like this fast. And then, of course, if you take a look at what's going on, right, there's been this disconnect. My office is in New York City, and first of all, it's quiet. Today, there was actually more people that I saw commuting today than I have in the last month, because I've been commuting into New York City now for a little over a month, I'd say. But there is this disconnect, right? New York City, there's always a ton of tourists. There's not right now. And where are these tourists going to come from? So this is going to take a long time, and you're starting to see, we've heard about for a while the last couple weeks, and the market has been pretty much not sensitive to all these corona cases going up in various different states. Well, we're starting to see states kind of roll back their openings. So there's going to be certain companies that can weather the storm, but not every company is going to be able to do so. And some are under big stress right now. There's going to be more and more companies that if the country has to take a step back in many states, like California announced today that they're taking a step back, where does that leave a lot of companies that are in the midst of trying to recover and get better? Now you're basically going to have to take a step back. And again, I'm not getting political because I see a lot of people are faulting the governors and so forth for doing this. I don't know what else are they legitimately supposed to do. The hospitals are getting flooded, so there's got to be places for sick people to go. And the more that people are not, again, I don't mean to go down this road, but if people are not adhering to what they're supposed to be doing, you can't have these hospitals get way overburdened because sick people can't go to a hospital. And that's the stage that some of these states are in. So what choice do they have if people don't want to adhere to what they should be doing? Which is basically, you hear people arguing about whether or not they should be doing this stuff. So, bottom line is if that's the course that's going to happen, it's going to affect companies differently. Somebody asked today, which was a great question too, because we heard about California is going to have to like reclose their gyms. Okay, well, why did Peloton go down? Well, because it's de-risking. This is going to hurt if you take a step back and shut more things down. People are just not going to have money to spend on a Peloton. That's the whole situation. And people are going to be, instead of people spending they're going to be hoarding money. They're going to be saving, just like toilet paper. So that's the risk, of course, that goes down the line if many states have to take a step back. And people who work at businesses, if they're not getting as much businesses, they're going to be forced to save more and not buy a Peloton, not buy things on Amazon, not buy Lulu yoga pants, right? So that's the implications of what we have going on here. So I know that's very much deep into the weeds, but you kind of have to think things out. Bottom line, and I'll kind of leave the video here, is that in the next couple of weeks we've got all kinds of information that's going to be coming out from different companies. Like tomorrow we get obviously JP Morgan, but this is a time that I said in the beginning of the video is very difficult to swing trade option. Sorry, just to swing trade positions. Doesn't have to be options. Even more difficult with options. But I think like during earnings season, I typically try to play a little bit of defense and try not to put so many positions on. All right, so that's kind of the thought. We'll have much more strategy. And again, if you're newer to trading, like don't get too worried about the market going down. Like this, that's part of how it works, and that is really how you learn and become a better trader when you've got a little bit of volatility that you're dealing with in the marketplace. You begin to look at things. What names are going to hold up better? What names are going to be the true market leaders? Like let's say we do get a multi-day pullback. What names are going to come out of that first? Right? So there's going to be a lot of things for you to really improve your trading as the market comes in a little bit. So don't be afraid of it. Embrace it a little bit because there will be some good buying opportunities that will hopefully come out of it. All right, guys, have a great night. See you tomorrow.